All right, traders. Today I'm going to talk about short selling as one of the predictors of intraday stock movements. And what is a short selling? This is where traders believe that borrowing a stock to sell at a higher price. When the stock goes down, the price goes down. They profit from it, and then they can buy back and then give it to the owner. So let's say that you borrow the stock from the owner at $10. You would hope that it goes down to $7. Once it comes here, you profit from it and then buy it here and give it back to the owner. But sometimes that doesn't happen. Once the stock start declining, it can come back here and then start to go up, and it means that you have to buy it back at the higher price for the owner. But where can we find these stocks and why does it matter intraday? We can find these stocks using Yahoo Finance or also Finvex, which is free. You don't have to even log in. Once you come to Finvex, you go to Screener, and you have to do a little bit of filter. You go to Screener. Now I'm looking for short floats above 20%. So I do that here. And then because lower floats is one of the indicators for intraday trading, I want to scan stock that have low floats so that I don't um, waste much time. So I'll put it under 50 million. And once I got this uh, uh, small floats, what I'm going to do is I want to know who are the ownership and what do they own. So I go to the ownership tab, and then it will bring me. I'm trying to narrow in into stocks that have high short ratio. Now it just brought me this. So these are the stock with high short ratios. But you always want to compare, trade it in conjunction with short ratio in conjunction with low float. So if you look at it, all these stocks are have some higher floats. So um no, I picked the wrong one. We want stocks under 50 million. So this is why we're looking at. We're trying to narrow in, and then we will tie it in into day trading, how it squeezes, and you will understand why GameStop was able to move all the way to about 400, because at some point these people were losing money, and you can lose a lot of money short trading a stock. So you have to buy back for the owner, because you are thinking, well, if I buy the stock for um, if I borrow it at $10 and it goes to $1, I can sell it for the and give it back to, I can buy back to the owners. But if it doesn't go to $1 and it go to $100, you still have to buy it for the owners. All right, so we've been able to get stocks that have low floats here, but we need the short ratio should be, because that tells you the number of days they need to cover, and the higher that number, the better, because now it is hard for them. They need a huge volume to be able to, because people have to sell a lot for them to be able to buy and cover. So now we are looking for stocks with high short ratio. So let's take NGEN for instance. It has about 12 million float, which is good for day trading, and also it has about short ratio of 25, which is also good for day trading, because now they have almost about 25 days to be able to cover. So it's gonna be any little news that comes around the stock is gonna squeeze this short sellers out, and they have to buy and cover. So how does it come intraday? We are looking for when we trading stock in a day, we're looking for um, one catalyst, what news is pushing the stocks. So now, if we thought we that this stock was dead, so we're gonna hold short sellers thought the stock was there, so they're gonna hold it for a long time, right? All of a sudden, this company comes up with new invention. They launch a product that is new. Let's say they launch an anti-drone product that can uh, um, shoot down 1 million drones at a time. This is huge news. So instead of this stock keeping the price going down, 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 you will wake up and the price is maybe at 28. Now you borrowed it at 20, it's 28. So you have to quickly buy it back for your owner. It doesn't matter how high it goes, you still have to buy it. So now these short sellers are buying, right, to cover whatever the shares they borrowed. And then the new those traders that trade in a day also woke up and saw that, hey, this stock is on the scanner, is this is a top gainer, now it's breaking the highs of the day, so let me go and also buy. So you have two buying pressures on the same stock. And if the flow, the shares in the market is even small, then it add to it. So this is how stock can move intraday, 500%, 1,000%, 2,000%. And I've seen a stock that went up over 20,000% in a single day. I think it's HKD, which was Hong Kong stocks. So those are the things that I look for uh, during my preparation for day trading. One, I look at the news that is pushing the stock. Two, I look at the number of shares in the market. And then also, I'm looking at the share ratio, number of days, how high it is that people have the share interest that they've borrowed, and the number of days that they need to cover. If they have a stock has a high um, share interest, people have borrowed a lot of shares to sell, thinking that it's going to go decline. Yes, and then the days that they need to cover it's higher. Those are also a plus to the stock that you are watching for the day. Because remember, you are if you are day trading, your whole goal is to make trying to capture some profit within the day. And if you don't have indicators that will make the stock squeeze higher in the day, then there's no need to pick that stocks. And this is one of my predictors, indicators that will make me say yes, this stock will go up a day. Stocks doesn't just stand up and then go up. There's always an underlying indicators, underlying predictors that makes the stock go up intraday, and this is one of them. And um, for the resources, like I said, Finvex is a free resource that you can use it, or you can also go to Yahoo Finance and go to statistics. If you go to statistics and you scroll down, you will see the share uh, short ratio. You will see it over there.